Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, January 19th, 2025. So I didn't make any trades on Friday. I had some 24-hour virus that hit me, and I was laid out. So I do apologize, but I didn't make any trades for the funds. So really, just watch the market. But we saw, the bulls do what they've really been doing for countless many years, where they're moving the market up when the cash markets are closed. So this is not a proper way, or let's just say, can it go higher? Yes. Is this a solid foundation for when we get a pullback? No, because these gaps often get filled. So this entire rally at some point will get filled. And it's, again, if we are in a different circumstance where, you did have the street and everybody believing that, easier money was coming, yes, we can get a melt up. But right now, that consensus is going the other way. There's a lot of uncertainty out there, and I don't think the bulls are going to have it as easy as they've had it for, say the last 2 years. So we're going to get these spike ups, and then we're going to drift lower or head down hard lower. But it's going to have to be, I think it's going to be a trading environment all the way until we get, sometime into the August timeframe. Now, if it changes and we start seeing a melt up, so be it. Then we just, trade the long side. I'm not, too concerned on whether we're making new highs or not. We just really want to make trades. But really, what we want to do is be prepared. So whether you're following the trades in the room or you're just watching these, the warning sign down here was not to be short, not to build any more short position, because we're going to be setting up for some type of short squeeze. And within a 3-day time period, we saw the S&P rally from 57.68 all the way up to 59.78. So over 200 points to the upside. This is why you need to trade. And, when everybody was here and thinking that we were heading up to new highs, they pulled the rug out and then gapped us all the way down. So one, pattern that could be in play, I don't believe it is, but I'm just going to show you what I think other people will be showing you, is an inverted head and shoulders pattern where this is the left, this is the head, and then from there we get a pullback and we form the right shoulder. Now, the reason why I do not I don't like the pattern is if we just take a look at the daily chart. And what an inverted head and shoulders is a bottoming pattern. So whenever I see it form, if it's forming at the highs, which we are right here, I don't pay attention to it. I actually believe that it's going to be used as a trap to trap some bulls. And but that's kind of suggesting right now that anywhere up in this area we should get some kind of pullback, whether it be to the top of this gap at the 59.08, or they come down and close the gap and make the right shoulder and then try higher. And if they try higher, like I said, we could get above it, but I don't believe it's going to last at all. And you'd want to be using that to get short. But this was the reason why I was looking for for the rally or the short squeezes. We had bullish divergences on the daily charts. We are very oversold, and this is what happens. So if the bulls decide that they're going to head higher here, what I was really just showing you the fib retracements from this from the drop here and seeing where they were, and being that we're already up here. Obviously, that wasn't the fib lines that were being followed, because it would have stopped before the 78% retracement. So this isn't the line. You could put it here, but it's really not changing. So I'm just going from the all-time highs and saying we came down here. And you can see this yellow zone, because this is where I think that there's going to be a lot of sellers waiting, and that's going to be anywhere between the 60.22 up to the 60.50, say, in that area. And remember, my target on this has always been the gap at the 60.31. So we came, we tried to get up there today on Friday. We made it to the 60.13, and that was it. But I think this will be closed before, before we start any sustained move to the downside. So I think these are, this is a, an area to look short. Now, if they gap it above here, again, I would be looking at this as building a position on the short side, or just moving to cash, or any, you know what I mean? I just think that this is they're giving people a chance to get out before they come back down, because as I said, my anticipation is that we're going to be trading in a large range, and you're going to get crushed if you try to just hold it and don't do anything. I think you're going to see massive moves in both directions. So again, on the upside, we're looking at the 60-20 up to the 60-50. On the downside, you can see if we go to the 15-minute chart, these are the support levels. So the first one is really going to be right in this, where the gap was. Typically, they try and, they hold that. You could also see it's the 200-day moving average. So this would be really the first, say, support line that the bears need to get through. Now, if they do, that's where I would anticipate us coming down to the 59.64, possibly down to the 59.33 to test this support area. If it gets below that, you can see the 59.34. So this area right here, this is what the bears need to get through. Otherwise, we're just going to see these rallies, any kind of dips bid back up. But like I said, what I would say is if we break through this support right here, we get a pretty quick move down to anywhere at this support area, and then we come back up, and either we get through these highs and start testing up here. Or what happens is we take this out, and now we start the next move to the downside. And remember, we still have a gap at the 58.44. So there's a lot of gaps that can get, that need to get filled. And we do have sell signals on the 15-minute chart. But the first support area, 59.80. Second one is going to be the 59.60. And then we're down at the 59.34. So I'm kind of, I think that it would make more sense if we had a little bit more of a pullback than what we've seen. Again, the bulls are going, with the all in or all out type trade. So we're at the top of the range right here. And if it gets held down, excuse me, then, I believe we're going to be trading down at the 5,800 level in a pretty fast manner. So we'll let march to the close tomorrow for Martin Luther King. So let's see what plays out on Tuesday, and I will have a great long weekend.